Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, May 26th, 4:33 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what's important to know for next week, and update the world famous 21 over 21 leaders list. Let's dive right into it. State of the market. Large cap uptrend continues, led by AI tech related stocks. Definitely wanting to still avoid regional banks, commercial real estate. Check the trend gauge over here. Market leadership took a step forward over the last couple days. We have that marked bullish. Short term, we've got the S&P and the Nasdaq 100 trending strongly above their 21-day short-term moving average. Small caps had a single close above. We want two above to cement the trend. Dow and mid caps continue to lag on the short-term basis. Medium term, S&P and Nasdaq 100 trending above the 50. Small caps making a run at it. Dow and mid caps lagging. Long-term 200-day moving average, all three big cap indexes above there, mid and small caps lagging below. So what happened today? AI tech strength leads the S&P 500 and the Nasdaq 100 to 2023 closing highs. Really quite a display of strength the last 2 days on the back of NVIDIA's earnings report. I honestly don't recall ever a single earnings report from a single company cascading through different sectors of the market the way this has. And it's reminding me a lot of 1999 and the dot-com boom. A lot of experts that are smart in this field talking about how bright the future is, talking about a 10-year cycle for this technology, and the price action supports that. We may look back and say this was a bubble, but if it's a bubble, we'll call it a wave, and we're going to ride this wave until it inevitably ends, as all waves do. But we've identified it. We're going to stick with it. Here are the numbers on the day. And also, we rallied in the face of a negative economic news item. So we'll talk about that also. And then the theme for this video is two letters and two numbers that bulls love. When we get to the tail of the tape, I'll have them highlighted. So the RG8, this is our 8 ETF growth composite proxy, up 1.32%. S&P 500 gapped up 0.2% at the open and rallied most of the day. Two brief pauses. Nice final number, up 1.3%. Nasdaq 100 is where the action is, up 2.6%. Dow up nearly 1%. Same with mid caps. Russell up slightly more than 1%. Global diversified 60/40 stock and bond up 0.9. Bonds tight on the day. International stocks rallied along with domestic. In-house GROTECTION up 1.07%. We'll hit the tail of the tape, the updated 21 over 21 list. Let's get into it. Here's the S&P 500, and it's very clear the strength of the last 2 days. And now this is the second time that a big tech stock reporting earnings has turned the tide of the market. The first one was 5.5 when it looked like we were breaking down the day before. Apple reported great earnings. The market rallied off of it, but all it did is get to above the 21 EMA, and then we went 8 days tight before breaking above it on 5/17. The title of last week's uh, big show was the breakout edition. We rallied nicely for 2 days, consolidated for 2 days, and then debt ceiling angst hit the market. We pulled back harsh for 2 days. The second day particularly harsh, but it held the 4,100 level. Hint, hint, one of my favorite numbers for this week. And then NVIDIA reported. We gapped up and rallied yesterday, opened up and a strong rally. Week closed near the high of the week, closed for the high of 2023, and also closed for the first time above that stubborn 4,200 level. A lot of good stuff for the bulls here. NASDAQ 100, quite obvious from this chart where the strength is. Need I really say more? I don't think I do. Let's go to the Dow, which bounced off of the 200-day moving average yesterday, followed up with some strength today. Mid caps, MDY, rallied up into its declining 21 and 50-day moving average, 200-day right ahead. Very clear what the bulls want, a break above this, let's call it 452 level. And then basically, when we want to see it do what the S&P 500 has done recently, it consolidated, false breakout, back test the breakout. Let's give it another shot, but we're going to need some broader participation. As you can see how weak the relative strength line continues to be for mid caps. Let's go to small caps. They're showing a little bit more strength than mid caps, or they had been early in the week. You see the rally up to the declining 200. Uh, Really a good risk reward short at that point. 2 days down. Didn't finish positive yesterday, despite the big rally in tech stocks because it's big cap AI tech. But a nice day today, up 1.14%, reclaiming just barely, but reclaiming the 50-day and 21-day moving average. See if we can make another run at the 200-day moving average next week. Let's go to the dollar now. UUP consolidated today near the highs after a very strong week. How did that translate over to precious metals? Well, silver had a nice day, up 2.5%. And this is a Morningstar pattern. It's when you have a big move down, the last candle looks exhaustive. You gap up off of that and reclaim at least half of the prior day's candle. Also, very oversold. Maybe a good setup for higher prices for precious metals, lower prices for the dollar. Maybe we don't know. But that weaker dollar benefits stocks as well as precious metals. It hasn't been as uh, that's been the correlation. It hasn't really been as much the last couple of days, in particular, as the strength in AI has overcome any headwinds that the dollar might provide to the market. Gold GLD uh, sitting at that 180 level, also oversold, up fractionally for the day. GDX, gold and silver stocks, up fractionally, also sitting on this 30 level, very oversold as well. How about the VIX? Strong up day in the market. You would expect weakness in the VIX, and we did get that. So again, this 20 level, looking back to the beginning of May, has served as resistance once we got there on the VIX. Now, notice that the VIX has not broken lower the way the market has broken higher. So that is something to pay attention to. We came to rest on the 21-day, now uptrending 21-day moving average. So I consider this, it's good that we're under the 20. It's bad that we didn't confirm. It's neutral that we're sitting on the 21. So a mixed bag for the VIX now. Let's get to bonds. We had a mixed bag on bonds also today. Biggest move up was on TLT, rallying off that 100 level. Broad bond index up just barely 0.12%. 30-year yield down, taking a break at that 4.0 level again. 10-year yield, TNX, down also just fractionally, closing basically in line with what we did yesterday. Bitcoin up 1.3%, bouncing off this 15 level. This is Bitcoin futures. So that is the interasset correlation that we do. Let's get right to the tail of the tape now. So one close, we 524 yesterday. We broke below, or 2 days ago, we broke one close below the 21, back above it yesterday, furthering the advances today. So we're still the bear case or the bull case still intact. So the news before the open, we were up 0.2% at 8:30 Eastern time. PCE inflation data came out, and it was hotter than expected. Now, normally the market, well, I don't know about normally, but a couple of months ago the market would have fallen apart on this. Market pulled back to flat, rebounded, opened it up 0.2, and then just shook it off and rallied all day. So ignoring hotter than expected inflation data. Maybe the market is more focused now on a soft landing than it is on what inflation is doing. Day count from up 1 to up 2, first close back above the 8, second above the 21. Our expectations are positive, with this being above the 21-day exponential on the S&P and the NASDAQ 100. Strength today, Chucky, that's XLC, KNY. Those are the three tech sectors, and those are the three that are benefiting from AI, mostly semiconductor, software, cybersecurity, and cloud. These three groups, these three ETFs, just blasting to the upside. Big software, big tech, semis, uh, security stocks, and cloud stocks. Two great days on the downside. Dollar mild weakness, oil's weak. XLP and U were weak or flat, but positive or flat. XLV and oils were the only really two sectors down on the day. So here's what we own. You'll see them in the 21 over 21 list as being flagged. They're in order of size. Changes to the portfolio today. We added to Tesla and Uber, and with the strength, got rid of our hedge, taking our exposure up to a 2023 high of 1.59 relative to a 1.0 S&P 500. So bottom line, and these are my two favorite letters, AI, tech rally continues, S&P and Nasdaq close at 2023 highs. Now, what are my two favorite numbers and why are they my favorite numbers? 4144 and 4100. Why is that? Let's get back to the S&P 500 and draw a couple lines here. Here's the 30-minute chart of the S&P. You recall how I had been harping on this 4140 to 4150-ish level that we broke out above on the 17th, pulled back to on the 23rd, broke back below on the 24th. But what did we hold on the 24th? The bottom of this tight range, the 4100. We bounced right there, made an effort at getting back above it, which we did on Thursday, followed through strength on Friday. So why are those two numbers my favorite? Because 4144 is above 4140 and also now is the 21-day exponential moving average. That's an additional support point if we pull back. Second number is 4100. Why is that? That's where the 50-day moving average is, which now coincides with the 4100 level, which was the big support area from this range. So that's why those are my two favorite numbers. You go to the daily chart and you can see here 50-day moving average, uh, the red line 4100 and rising, 21-day moving average 4144 and rising. Good for the bulls. Nothing bad in those numbers. So my two favorite letters and two favorite numbers, I feel like it's Sesame Street, but if it is, it's a bullish Sesame Street. So let's get now to the 21 over 21 leaders list. I did bottom line here, right? Yep, AI tech rally continues. S&P and Qs close at 2023 highs. So the 21 over 21 leaders list first. What got punted this week? Here's the five tickers. ITB, Broad Home Builders, was on for quite a while. The broad sector succumbed to the 21-day moving average. We've got a substitute for that, however. MAXN, Solars just cannot get it together. This one showed some promise with a big breakout, but hasn't been able to follow through since it had a secondary offering. Lantheus, LNTH, uh, I didn't really understand. I read the news piece, and it was down on volume 7%, broke the 21, bounced at the 50-day moving average. Maybe an overreaction, maybe not, but it's below the 21 and therefore off this list. Mondelez, this was when I put it on here, I did it because I wanted it to be a reflection of what Staples were doing after it gapped up on its strong earnings report, went sideways for a while. Staples have fallen apart. Mondelez breaks the 21, so that's off the list. And finally, Wing. Restaurants had been some struggling a bit. Wing couldn't get anything going since its earnings gap up. CMG has been much stronger. We own that, and that's still on the list. But Wing closing below the 21. So those are the five that were off. These next five are the five that are on, and anything that we own is highlighted in red. MNDY, first software stock added. This is forming a very nice base, and you can see the big volume on its earnings day. Nice, beautiful little lower volume flag. And then look at the volume that came into this to take it off of 150 and up to the top of this. It's really just showing a cup base here, but I would consider this a cup with a little handle. The handle just was a day short of the minimum. That's why it's showing as a cup, but I'm going to consider this a handle and note the relative strength line on Monday.com. Semiconductors. I could have filled up the entire 2121 list with semiconductor or AI related stocks, but suffice to say, we'll use this to track the entire sector. I still have two additional semiconductors on here, but like I said, the sector's on fire. We'll be digging into it more next week. The third edition is software, which is on fire also. Really, it's big software. We're talking about CRM, Workday, Adobe, Microsoft. Look at the volume bars on this over the last 2 weeks as it breaks to a new high. Software lagged for quite a while. It's making a huge comeback now as a lot of these companies have an AI component as part of them. So, two big ETFs serving as a proxy for a bunch of stocks that are in those groups in SOX. You could also have SMH in there and IGV, the big tech. Toll Brothers, this is the strongest of the remaining housing stocks. DHI was second. It broke below the 21, but a gap up and it's holding it on earnings. We want to keep this on as a proxy for the overall home builder market to see if this continues to stay strong and drive this pull the sector higher or if the sector drags it lower. Tesla, we added to this today below the 200-day moving average. This has enough positives going for it since its shareholder meeting uh, to have me included, even though it's below the 200-day moving average. Beautiful. First of all, a cup with handle that failed here back in March uh, was disappointing. Disappointing reaction to its earnings report, positive reaction to its shareholder report from last week, and that's what I'm focused on. And it really acted, and they have a partnership with Ford now, where Ford's going to be paying them to allow Ford cars to use their charging stations. So another line of revenue for Tesla. We bought it this week. We added to it today. The tell-all is going to be what happens when it runs into this 200 level. It's a Livermore level, obviously. It's the 200-day moving average also. Wouldn't be surprised for a pause here. If it breaks right through it, that's just a testament to the strength that it also has going on. And this is not an expensive stock. PE of 48, 2024 earnings of 44%, puts its PEG ratio just above 1. That's good stuff for a stock with as many uh, lines of income, revenue streams that it has. So Tesla back in the list and back in the portfolio. The rest of these are carryovers from last week, starting with Palantir, which has just been an absolute beast. Live Nation flagging nicely after its earnings report. DT, we added to this today, flagging nicely above this breakout level after its earnings. Stage 1B base. ELF, great earnings report. We got stopped out, had no cushion into earnings. Great high volume report. Down 2.76% today as Alta report really got smacked on earnings today. Disappointing earnings, but holding this 100 level, and we're eyeing a reentry on this stock into the portfolio because we can't own all AI stocks, can we? CMG continues to trend higher above the 21 and has recaptured the eighth. AMD, this is semiconductors in a single picture, and NVIDIA is going to look the same way. Great reaction, monster accumulation since this supposed partnership with Microsoft was announced. Incredible relative strength, and again. Moving along with the entire SOX and SMH ETFs. Supermicro, a beneficiary of AI and NVIDIA, just crushing it, a true leader. Celsius, little disappointment, not showing any relative strength this week, but it was an AI week, I guess, but it needs to start showing us something or it's going to get punted from the portfolio. Uber, 5 down days, barely made a dent in the progress of this. We added to it today as a little bit of volume came in the afternoon, faded by the close, but still overall a good day and a nice setup. Intuitive Surgical undercut but reclaimed the 21. That's what you want the best stocks to do by the end of the week, unlike the 5 that got punted off. DraftKings, 4 weekdays after this big move higher, but sitting on the 21. Note volume has lower. It has that going for it compared to the big volume of the 3 days up the prior time it visited the 21. Race undercut but reclaim the 21. Again, this is what the best do. They get back above it by the end of the week. Nvidia, need I say more? With just a historic earnings report, earnings beat, raise of guidance for a stock this big is just incredible what this has been able to do. This week added $200 billion in market cap over the last 2 days. Meta continues to be a strong AI stock, just trending higher along the ADMA. Microsoft, same thing, even a little bit stronger than Meta. And Shopify pulling back. We got stopped on this week. We bought it off the 8. It didn't hold the 8 the next day, but it has held the 21. Let's see what it has next week. And that's it. That's the updated world famous 21 over 21 leaders list. And with that, I'm going to wrap it. So remember, it's not how much you make in the markets, it's how much of that you can keep. We've managed to dodge the bear market for the most part last year, losing less than half, not keeping up with the S&P this year to the extent that it's come off the lows, but that's kind of typical of the expectation for coming off the low in the type of portfolio approach that we take. But now firmly above the 200-day moving average, leading stocks and leading sectors coming to the fore. Some outperformance versus the S&P 500 this week. We're feeling good about the leading stocks that we're in. As always, we keep our stops in place and ride the wave until it ends. And with that, I'm going to wrap up the week ending 5/26. Of course, it's not how much you make in the market, it's how much you can keep. Have a great long weekend. We appreciate it's Memorial Day. We appreciate the sacrifices of the many veterans throughout history. And that's a wrap. So, ending up the week ending 5/26. This is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.